my video, my opinion. This has been one of the biggest changes in the last 6 months. So what is the trajectory going forward? Now there's one thing you can count on, and that's change. So what has changed in 2025 in the Phoenix real estate market, and what hasn't? Starting with interest rates, a modest change, but we like the direction for the first 6 months. 30-year interest rates started at 7.07% on January 2nd and finished at the end of June at 6.67%, 40 basis points lower. They've rebounded a bit since then, but still lower than the beginning of the year. We have to remind ourselves how critical interest rates are to affordability. A 1% increase or decrease in the interest rate of the loan will increase or decrease the loan payment by 11%. Just a modest improvement in mortgage rates at the end of June resulted in a rise in mortgage applications and headlines like these. When interest rates fall, buyers have hope. They're motivated. Applications increase because the affordability improved, even if it was just by a small amount. Do you know how rates over the long term could go even lower? You may or may not agree. That's fine. My video, my opinion. Let's move on. Next is listings. This has been one of the biggest changes in the last 6 months. Looking back a year ago to 2024, the number has increased 44% from this time last year and appears to be leveling off. The first half of 2025 saw listings rise 26%. That sounds threatening, right? Let's step back for a moment and put this into perspective. Here are 3 cities showing 2025 inventory levels compared to 2015 through 2017. Obviously, it depends on what years you are comparing the current inventory levels to. It looks like we're returning to levels we saw when the market was more normal. Could it be that we're returning to normal inventory levels after a market disruption that lasted 4 or 5 years? I mention this because some have an opinion that the inventory increases are catastrophic, causing a crash. The point is, we need to keep things in perspective. Now, a quick question. Are you finding value? If so, please like and subscribe. I do these market videos every 6 months so you can stay informed of what is happening in the Phoenix real estate market. Now let's move on to see what the increase in listings has done to prices. Here's a graph of the median sales price for the Phoenix area, including Maricopa and Pinal counties. What's changed in the first 6 months? In December 2024, the median price was $455,000. After the first half of the year, June 25 finished at $451,245, about a 1% decrease for the first half of 2025. The July number, $445,000, would put us at a 2% decrease year to date. Now, this may be an indication that the second half of the year has a higher likelihood of a decrease than the first half, but 1 month is only one data point, and we saw a similar dip last year. In fact, where were we last year in June? 442,500. And going back to June 2023, 445,000. Obviously, some seasonality, but essentially flat. With the increase in listings, 44% since July of last year, median prices have decreased 2% through July 2025 and essentially flat from a year ago. Now, this is for Maricopa and Pinal counties and will vary by city. Not the crash that some would have predicted. However, downward price pressure will continue through the rest of the year, and I'll tell you why in a minute, even though the inventory has leveled off. First, let's turn to distressed properties. You'll recognize this chart, which shows the notice of trustee sales that always precede properties going into foreclosure. While increasing, the trend is starting to look like it's getting back to normal. Now, here's something where we have seen some changes. Distressed homes, which include foreclosures, HUD homes, and short sales, they do show an increase. A 265% increase from last year at this time and 63% in 2025. However, short sales account for the biggest increase and the majority of these distressed properties. However, these represent only 1.4% of all MLS listings. While they have increased, they are returning to what was considered normal pre-pandemic levels. We've discussed where the market is now. So what is the trajectory going forward? One of the best tools is the Cromford Market Index. Hang with me on this one because it provides some very good insight. This chart is for the Phoenix area. A score of 90 to 110 is considered to be a balanced market with homes appreciating at the rate of inflation. More than 110 means it is approaching a seller's market with higher appreciation. Less than 90 is trending downwards towards a buyer's market with downward pressure on prices. Now this chart represents the entire Phoenix area. Each city will have a different score or value. For example, right now, Buckeye is at 49 and Casa Grande is at 49. Very strong buyer markets. While Chandler is at 111 and Fountain Hills at 108. More of a balanced market. What this tells us is that the overall Phoenix area is in a buyer's market. However, each city must be looked at individually. You have to go back to 2007 and 2008 to find a more favorable buyer's market. The Cromford Market Index leads me to believe that the second half of the year will continue to see downward pressures on prices. How much? Everyone is free to speculate, and they will. In summary, here's what we're looking at. Interest rates are critical to affordability, and favorable rates motivate buyers. Listings for the first half of 2025 increased 26% and about 44% from a year ago. At the same time, the median sales price has fallen 2% through July year to date. It can be argued that the median price has been level for the past year. Distressed properties have increased from a year ago, with short sales making up the majority of the increase, not bank-owned properties or foreclosures. With the Cromford Market Index indicating a buyer's market in most cities, there will be even more downward pressure on prices for the second half of the year. Now, if you'd like more specific metrics on your city, reach out to me. And if not, we'll see you in 6 months to see what happened in the second half of 2025. Thank you.